Good morning and welcome to MOTH News. Now, if you've ever wondered why it's so hard to get a mortgage in Ireland, even when you're doing everything right, or why repossessions are still happening over loans taken out during the Celtic Tiger, then this next conversation is one you need to hear. Cormac Butler is a financial consultant, a former derivatives specialist, and a whistleblower who has been raising the alarm about serious problems in how Irish banks operate and now how the central bank regulates them. He believes the banks are hiding major losses and that the central bank is choosing not to act because doing so could unravel the entire mortgage market. That at least. Today, he joins me to explain what he's uncovered, why he chose to speak out, and what it all means for Irish homeowners, renters, and anyone hoping to buy a home. Cormac Butler, you're very welcome to MOTH News. Thank you very much for joining me.
Thank you.
So I suppose we'll start at the start, if that's okay with you. It's a very good place to start, isn't that what the song says?
So yeah.
Take us back. What were you doing professionally before you started to raise concerns, and what were the concerns? What was that moment where you said, "I need to speak out here"?
Well, prior to the crash in the year 2000 and even before, I was a trainer for bank regulators. I trained over 100 regulators worldwide in all countries, Africa, Asia, America. And my role was to ensure that regulators could understand how banks operated and understand the risks involved. At the time, there was plenty of regulation and fairly sturdy regulation. For instance, the accounting rules said that banks must reveal all losses. And then there are special rules called the Basel rules, which ensure that banks have sufficient capital in order to survive. So people borrowing money from the banks felt reassured that banks would do the appropriate due diligence to make sure that people could afford what they needed to borrow. And investors could feel reassured that the banks were well regulated, and many families in Ireland and the UK and in Asia put money into banking shares knowing that there was risk, but that the risk was fairly contained and controlled. Around 2006 and 2007, banks were operating very well, at least in the public sense. They appeared to be very profitable. But in the financial crisis of 2008, it took people off guard. Many people who had invested in banks saw their investments halve or quarter or even disappear altogether. And it was very strange given the amount of regulation and given the resources that banks had on compliance that this should have emerged. It subsequently emerged that banks were operating a two-tier system. In public, they were producing accounts which were very profitable, but in private, they were producing accounts which showed that they were potentially insolvent or in difficulty. And that situation should never occur. Banks deliberately misled the public, which is a potential criminal offence. They deliberately misled regulators. And there are a lot of casualties, and I think Ireland is well aware of these casualties. A lot of people took out mortgages between 2005 and 2010, which they should not have done if they were given the appropriate information. The banks had that information, but they chose not to reveal it. And therefore, a lot of customers suffered as a result of the bank's failures. So in essence, banks imposed their losses on customers despite being bailed out. So it's a very serious breach. And we now have situations where people are facing repossession in the courts. In some cases, banks are forcing people into prison until their houses are sold and then releasing them. So it's quite a serious matter. I don't think it's going to improve without some form of intervention.
So was there a specific moment, a meeting, something that you saw, a document that made you say, "I need to," like a day? Do you remember a day where you went, "I'm going to have to start speaking
I
out about this"?
remember writing an article in the Irish Times talking about the American subprime crisis. That was back in about 2010. And that article disclosed that in America, many banks were buying what we call subprime products, and these products were completely worthless, and the banks didn't know how to value them. And I was showing the anomalies that created. And somebody, as a result of that article, somebody got in touch with me in the UK, and he said the problem is an awful lot worse than that. It's not a case of bank incompetence, where banks are negligent or making mistakes. It's a case of deliberate action, where banks are deliberately misleading both shareholders, the shareholders, the Irish government, and customers. So that moment occurred in about 2010.
So when you published that article, you wrote that article, it appeared in the Irish Times. Did you feel an immediate effect? Did it affect your professional, personal life? You know, was there at that point? Was there any sort of pushback from certain quarters?
No, at the time, I think the Irish Times were eager to get under the story, because from what I can recall, the Irish Times attempted to cover a court case where AIB wanted to raise money, and the two journalists knew there were problems, but they were told to leave the court case. In other words, it was held in camera. So it was obvious that a lot of information was being concealed. And at the time, the Irish Times wanted to cover that story. So they encouraged me to write these articles, and I wrote a few after that. But afterwards, the Institute of Chartered Accountants kicked up and said that I shouldn't be writing these articles. They tried to write counter articles to what I was saying. And eventually, the deputy head of the International Accounting Standards Board wrote a letter to the Irish Times to say that I was misleading in the articles. And at the same time, the Institute of Chartered Accountants in Ireland said that it wasn't illegal to hide losses. They said that the accounting standards allowed it, so it wasn't illegal to hide losses. That occurred in about 2015, and it was timed to coincide with the bank inquiry, because the bank inquiry revealed an awful lot of information. But all the bankers and the auditors there would have been in trouble if they had admitted to hiding losses. But when they could say, well, we admit to hiding losses, but the law forced us to do so, they were able to mislead the public. So the bank inquiry was a complete waste of time. Not so much a waste of time, it was actually very damaging. And the reason it was damaging is because people assumed that, okay, banks misbehaved. We had an inquiry. The banks were forced to hide losses. It's not a question of the banks wanting to mislead the public. They were forced to hide losses. There was nothing they could do about it. But now they've corrected their errors, and let's move on. So the bank inquiry encouraged a situation where, with hindsight, the banks could have done better. And that's basically their conclusion. And they said, now we're going to move on. There's new rules in place, and that won't happen again. But there was two lies there. First of all, the banks, it wasn't a case of the banks not knowing what was happening. They knew that they were misleading people. They knew that some people were going to suffer. And they said, well, yes, some people are going to suffer, but we're forced to do this under EU law. In other words, we're forced to hide losses and not tell the public. And that is a complete lie.
So, I mean, to any man on the street or any dog on the street, as I say, like it would, if you say to me, any organization, certainly banks, are allowed to hide losses, I just wouldn't believe you. You know, how can this be said in the public arena? How can this be said in? I mean, I don't understand why the chartered accountants were interested, bothered. Maybe you could explain that to me. But like to come out and say that it's okay to hide losses, essentially, if you're dealing with a bank, you're taking a mortgage out with them. It seems like you need to know everything. There needs to be transparency. That just doesn't make any sense at all. So how were they able to say that, and for there not to be public outcry or outcry from government officials?
Well, we can break that question down. First of all, banks knew in 2005 that there was an alleged loophole, and I say alleged, in the accounting standards which allowed banks to hide losses. Now, the reason that banks want to hide losses in general is because instead of bonuses being confined to profit-making transactions, bonuses could be awarded to anyone who entered into a transaction. So if you take America as an example, because it all appears to have started in America, what characterized the banking crisis in America was that bankers were paid billions in bonuses to amass trillions in losses. So they were paid billions in bonuses to enter into transactions such as subprime mortgages, where they knew they were making losses. And what happened back in 2005 or even earlier is that if you were working as a trader in a bank, you could give loans to anyone. You didn't have to worry about their ability to repay. You could give loans to anyone, and your bonus was based on the volume of lending rather than the quality of your lending. So the motivation to hide losses is that you are guaranteed a huge bonus. And in America, as I pointed out, bankers were paid billions in bonuses to amass trillions, to hide, rather to enter into transactions which had losses in their trillions. In Ireland, bankers were paid millions in bonuses, were paid millions in bonuses to enter into transactions which caused billions in losses. So you can see the motivation to hide losses. It's very good for bonuses.
Yeah, I can see the motivation for losses if they've decided that it's okay. You get your bonus just for, I mean, if I went out and if I went out and I was a car salesman and I had a conversation with somebody about a car and it was and it was all on finance or whatever, and I got a bonus once I sold the car, like without doing due diligence or whatever. It could have been. I mean, are you saying in theory I could sell a car to a cat or somebody who doesn't have the necessary money to be able to pay the loan back? Or
let's say you had a car dealership and you bought 30 cars at 40,000, and you decided to sell them to your friends at 25,000 or 10,000 at below market value. You could record an accounting profit even though you've clearly made a loss for your employer. So basically, it's a motivation to steal. It's that serious.
It's fraud?
Definitely fraud. The reason why I say it's fraud is because the Institute of Chartered Accountants in England and Wales, which basically governs what happens in UK banks, told banks that they could hide losses. They then denied saying that they could hide losses. So they told banks they could hide losses, and then they denied that they said banks could hide losses. That's more serious than negligence.
Yeah, totally. But if for me, I always want to try and follow the money, as it were. Like, so if a member of the government or officiating organization or watchdog is allowing a bank to say they can hide losses, who in turn are allowing staff to sell mortgages to get bonuses, even though selling mortgages for below, or for houses for below, whatever.
Yeah.
Is there so they're not just doing that surely so that there's extra money going into the pockets of the salesman, the car salesman. Surely there's money going back up.
Well, you see,
I'm not saying hypothetically, if I was a car salesman and my boss, the owner of the garage, was allowing me to do that, and I was making bonuses, he's not going to be happy if he's making losses and I'm making bonuses. So,
well, the owner of the garage might be a director who's looking after the garage on behalf of shareholders, and if he's allowed to record an accounting profit on your transactions, he's happy. The shareholders don't realize what's going on, so therefore they can't complain. And if the shareholders don't realize what's going on, the regulators won't realize what's going on. Therefore, the regulators won't complain. And in relation to banking, the regulator, which is the Irish Central Bank, are on record stating that banks provided misleading accounts and therefore they couldn't regulate the banks properly.
So by the time, say, the central bank or found out that this was happening, they had to be okay with the...
It was too late. So therefore the choice, I mean, they found out after the banks had gone bankrupt or became severely insolvent. So it was too late for the central bank to actually take corrective action. The choice the central bank had was to expose this or to cover it up. And at the time, the European Central Bank had lent vast sums of money to Irish banks. And the policy that the central banks and the Irish government chose was to bail out the banks first and then get the banks to reveal their losses. And that meant that the ECB could be repaid.
Okay, so we might get back to that in a minute. I sort of skipped forward a little bit. But I think some of this stuff bears repeating because for me, it's kind of just trying to get my head around join the dots and get my head around everything. So you said that Irish banks are concealing losses that could make them technically insolvent. Could you explain what those hidden losses are and how they've been concealed? Is that fair enough for me to say?
Yeah. Well, going back to 2005, you might come to me and say, I want a mortgage of 300,000 based on my salary. And I might say to you, I'd say to myself, first of all, if this guy takes out a mortgage for 400,000, I can get a bigger bonus. So therefore, I'll encourage him to take out the maximum mortgage possible.
Is this when we were seeing like 110% mortgages?
110% mortgages and that type of thing. So I'm encouraging reckless lending. Now, the legal people say reckless lending is not a tort. If you have money and you want to lend it recklessly and it's your money, you do what you like. It's fools and money have to part. But even though it may not be a tort to lend recklessly, there's two laws that they're breaking. One is the company law regulations, which state that if you do decide to lend recklessly, you must calculate the losses that you've suffered immediately on the date the contract is signed. And then consumer regulation, in particular unfair terms legislation from Europe, states that if you're going to impose some of those losses on the customer, they're called foreseeable losses, you must tell the customer in advance so that the customer can determine what the true cost of finance is. And banks broke both of those rules. They didn't calculate the losses and reveal them to the public by way of published accounts. And because they didn't reveal them to the public, they couldn't really reveal them to the consumer. So the banks knew that the financial crisis was going to come down quite heavily. And what they should have said to customers at that point is, we know something is going to happen. You don't know about it, but we know something is going to happen. Therefore, this loan is very risky. And you shouldn't enter into the loan contract. Because if you were an independent advisor back in 2005, and you knew that all banks were hiding considerable losses, you would say to the customer that chances are that the property you're buying is overvalued. There's also a very strong chance that your income projections are too high, given what's going to happen. Now, it may be okay if you're in the government sector because your salary is guaranteed, but for the self-employed and most people in private firms who are about to lose their jobs, taking a mortgage out in between 2005 and 2008 would have been a very bad idea. Now, some people would do it, but under the consumer rules, the unfair terms, you must tell the customer all the information you have that's of relevance to the customer. And between 2005 and 2008, for many customers, they were not aware of the true cost of finance. They were not aware that there were foreseeable losses which the banks were going to impose on the customer. And there is case law to support that. And the case law states that if a customer has not enough information to make an economic decision, but the banks are aware of information that they're not passing on to the customer, then it's an unfair term, and it's difficult for banks to enforce loans in those circumstances.
If I So I did actually take out a mortgage in 2008.
Yeah.
What were the potential risks to me? Like, I mean,
Well,
like, well, first of all, I bought a house for a lot more than
it
it
was
was
worth.
worth.
Yeah.
If you know,
Hmm.
probably 12 months later, maybe, so that was, so I suppose that's a problem, isn't it?
Yeah.
Because I'm paying. Luckily, I had I had the income tax, the inflation linked. I can't remember that it was a my mortgage repayments were a lot less than they should have been because they were linked to
Oh, linked to
inflation.
Euribor. Yeah, they were linked
Yeah.
to. They were probably linked to Euribor.
So so I was lucky in that.
So
So what were
that
the
when.
potential risks to me then? I'm taking out that money a lot more than I should have, a lot more than the house was worth. So
Mm,
first of all, house prices were being uh,
were inflated, overvalued.
falsely inflated.
Yeah, yeah.
And because there was more money to be made, more bonds to be made, if you sold a house that was worth 250,000 for 400,000, that's
Mm,
okay. So now I'm getting you. Okay,
okay.
so I'm getting a loan out for a house from the bank. The bank are kind of responsible, or maybe all fully responsible, for the fact that this house is almost double the value.
Yeah.
I'm buying it for double the value it's worth.
Mm.
Okay.
Okay. Well, just imagine you were in front of me in 2008, and I was an independent banker, and you said to me, "There's a house on the market for 400,000. I just guess your income. Your income is 120,000, and therefore you can well afford that mortgage. And we'll just say, for the sake of argument, that you were self-employed. Now, what the bank would have to say is, prior to 2005, if we were evaluating this loan, we would have to take into account any foreseeable losses. In other words, we try to estimate what you can afford to pay against what you are paying. And if there is evidence that your income is going to go down, or if there is evidence that the property is going to decline, then we would have to tell you that this is very risky and potentially not a very good idea. So that's how an independent banker would operate. And under the unfair terms legislation, that's what he is obliged to do, so that you can make an economic decision. You can say, well, the property is worth 400,000, but I do know that banks are hiding huge losses, not only the bank I'm dealing with, but all the other banks in Ireland and the UK. So some sort of correction is on its way, and some sort of severe correction is on its way. So therefore, even though the property appears to be 400,000, it's probably only worth 250,000. And in theory, what the bank should do is they should ask the valuer to value the house not based on current valuations, but based on the fact that there is going to be a crash or some sort of disaster in a few years' time or a few months' time, because banks are hiding huge amounts of losses. They're not compliant with the regulations, and therefore the credit market is going to dry up. And given that the price of houses is heavily dependent on the availability of credit, it follows that 400,000 is more than likely an unrealistic valuation. And if the true valuation is 250,000, then your foreseeable losses are 150,000. And you have to include that as well as your interest to see your true cost of finance. So you would say to yourself, this is quite a bad idea. I might be better off renting it for a few more years rather than paying an extortionate 150,000 on top of the interest. That's what the bank is meant to have told you. They didn't tell you.
No.
Now, banks could argue, oh, we didn't see the crash coming.
Well, I mean, there was a lot of talk about it, wasn't there? I mean, there was some
Well,
people
there
talk.
was. I mean, a guy called Morgan Kelly raised concerns, but then you had people on the other side, particularly economists, which were pro-banks, stating that there might be a soft landing. So, but that's not the important
Soft
point.
landing, yeah.
The real important point is that banks were hiding losses at the time. They were misleading the regulator, and they were relying on borrowed funds. So they were borrowing from overseas and putting misleading information into their published accounts to borrow money. That's quite a serious company law failing. So a crash had to emerge. There was no way that a crash could not have emerged. And And you could argue, well, Morgan Kelly, he's just one economist. He may be right, he may be wrong, but there are plenty of other economists who are pro-bank. We call them green jersey agenda economists because they were promoting banking and promoting property prices. But the economists are not important. What is important is that the banks had information that there were misleading people who were lending them money and misleading the regulator. So something had to emerge. Those losses would eventually come out.
But there was nobody at the time. I even remember, I feel like I remember our Taoiseach at the time giving out about people trying to talk down the growth of the economy. Like there was this general drive to get on the property market, to get something. House prices are never coming down. You know, if you don't buy now, it's just going to get more expensive. So this is like a so I mean, you talk about these, like you call them green jersey economists, journalists, whatever. You know, I often wonder like why they were promoting the banks and what was in it for them. Maybe they just loved banks, possibly. You know, maybe they're just fans of Irish banks, like I am Manchester United. You know, but I always worry with things like this. Like there's generally financial gain somewhere. I'm not accusing anybody of anything. I'm just saying it's very rare in society that somebody would be pro something and be so vocal about supporting something without benefiting from it in some way. So that was if people remember at the time, that was I mean, it still kind of exists, you know, in a way, but essentially I ended up buying a house that was, say, for instance, I bought for 400,000, was worth 250,000. And it was tight at times, you know, there was times where we weren't sure if we'd pay the mortgage, you know, for every month for a long time.
Yeah.
If it happened that I couldn't repay the mortgage, I couldn't sell that house for the value of the mortgage. So I would have been absolutely scuppered. And I guarantee you at that time, I wouldn't have known that
you wouldn't have known, but the bank would have known.
Yeah.
And that's an important legal point because it means that you couldn't make a proper economic decision, but the bank had information, which if they had passed on to you, you might have said, well, there might be a lot of economists thinking that the market is going to go up further and further and further, but banks are storing up huge losses. They're not revealing them. There's going to be a banking crisis. There has to be a banking crisis because it gets to the stage where the banks themselves cannot borrow money if they're conceding huge amounts of losses. And that causes a credit market crash. Therefore, you could not have made a proper economic decision based on the information that was given to you. The banks could have protected themselves if they said to valuers, when you're valuing this £400,000 property, take into account that banks are hiding huge amounts of losses, that the availability of credit will be restricted over the next 1 or 2 years, and therefore give us a realistic valuation rather than an optimistic valuation. And the valuer would have to come back and said, well, all of these properties are heavily dependent on the availability of credit. If there's going to be a restriction in credit, then this property is overvalued. Now, they won't be able to give you an exact figure. They won't be able to say it's 250, but the point is they know it's overvalued and they are required to estimate the loss on the overvaluation, or at least to give you the information so that you can estimate the loss. And there is plenty of case law on unfair terms where banks withhold information from the customer, and the customer wins because the customer cannot make an economic decision based on the contract that's in front of them.
So if at the time when I was looking at buying a house, I had a house to sell and then I was buying another house, so I needed an extra bedroom. There was an extra child. If I'd known somebody, if I had a friend in the banks and, you know, was privy to something and I was out for a drink with them, they might have said to me, sell that house, rent, and buy that house in a year.
Yeah, which would have been good advice. Yeah,
which would have been great advice.
Yeah.
But
you can't believe that because he's not giving you a reason. I mean, he's he's basing it on an estimate. But if he had said to you, sell the house, but wait until the banks admit their huge losses before buying another house, and you might say, what do you mean admit to huge losses? And if he said to you, banks are currently hiding substantial losses as we speak, and that has to come out, and that's going to affect the credit market, because Irish banks will not be able to borrow money if they are conceding losses in their published accounts. So therefore, there's going to be credit is going to dry up.
I can't believe that didn't happen. There's got to be one instance of somebody having a word with somebody going, listen.
Well, there are probably rumors going around stating that some banks are hiding losses. But then when you consider that the regulations are fairly tight, it's a criminal offence to hide banking losses. And there are special regulations known as the Basel Accord, which the central bank operates to make sure that banks have enough capital to survive a recession. But the central bank were ticking boxes saying everything looks fine, but they did admit that they did not have proper information. They were using wrong information to determine whether banks had sufficient capital, because the published accounts were misleading.
Okay, and because of all of this, we're still there's still losses being concealed because. Well, tell me what role the central bank plays in all of this, and why. Is it willful blindness, or are their hands tied? So what's their role if they're the people that are supposed to be keeping an eye on the banks, keeping them on the straight and narrow, and so that we as the customers and the citizens of the country know that when we take out a mortgage for 400,000, that we feel like, well, surely the banks aren't breaking the law, because that would be crazy. So we just wouldn't believe it if somebody said that to us. So what's the role of the central bank here, and why ignore this?
Okay, well, first of all, if you run a company, a straightforward company, a car dealership or something like that, you have to have enough capital to survive so that you can pay your creditors. And it just means that if you have losses, you can dip into the capital before the creditors are affected. So you have to have a certain amount of capital. Banks are different from companies because, in addition to having capital, the regulator, which is currently the central bank, states how much capital you have relative to the risks. So they would say, if you're running a car dealership, you might need X amount of capital. But if you're running a bank, because the risk of a bank failure will have a disastrous effect on the economy, the regulator makes sure that you have more capital than an ordinary company, so that you can cover, the bank can cover potential losses. Now, that worked well up to about the year 2000, because all the central bank had to do was take the published accounts, look at the capital that the bank had, and then measure the risks that the banks were taking and make sure that the bank had enough capital to cover those risks. It's known as cushion funding, so that if there's a shock, the cushion absorbs the shock. Around 2002, the International Accounting Standards Board said that we're going to introduce a loophole into the accounting standards, or at least we're going to try and introduce a loophole into the accounting standards that allows banks to delay the recognition of losses. In other words, to hide losses.
Well, you say loophole, and I've talked to many people about things like this, like VAT fraud or whatever, and people use the word loophole. Does loophole just mean fraudulent behavior?
Well, loophole means that you can comply with the law, but not comply with the spirit of the law. So, for instance, I could sell you a car, and the law might say I must tell you the mileage beforehand and so forth. And if it doesn't ask me to tell you anything else, then I conceal it, and that's the loophole. And I'm not complying with the spirit of the law, because you're not able to make an economic decision on whether you should purchase the car or not. So that's what the term loophole means.
So why were the Institute of Accountants, why were they interested in introducing this loophole for compliance?
The accounting profession basically look after the interests of the directors of a company. they shouldn't do. They should keep the directors independent, but it's the directors who appoint the auditors. So if there's a loophole in the accounting rules or in the tax rules or whatever, the accountants will more than likely, I won't say more than likely, but many accountants will encourage the director towards that loophole. It's an extra service. They shouldn't do that. They should say, well, we're independent and we have to look after the interests of the shareholders. But we know during the banking crisis that directors were hiding losses with the blessing of the auditors. So that's where the loophole emerges.
So a loophole. So the accountants were looking for this to introduce this loophole at the behest of company directors on their behalf.
Yeah.
Like what was their, like, if you were to look at it and go, well, actually, if you were to look at it and go, actually, it's okay. It's like, say for instance, allowing companies to pay an invoice. You know, you got 2 months to pay the interest. You don't have to pay the invoice or whatever, like a 60-day whatever. Is it something like that? Is to allow, like, okay, there's going to be losses, but give us time to.
No, I think it's more straightforward than that. If you're a director of a company, of a bank, and you say to the auditor, I want to pay myself as big a bonus as possible. How do I stretch the law? Some auditors will advise you how to do that. As long as they're not seen as breaking the law, they'll tell you how to stretch the law to suit your circumstances.
But it's different for someone to advise you on how to use a loophole than actually asking for a loophole to be created.
Well, the loophole was created. There is, I suppose, bankers in the US were very powerful, and they could lobby to have legislation changed, and they did lobby a few times to have legislation changed. And one of the legislative changes was that banks could delay the recognition of losses. So that was incorporated into US legislation.
So the directors could earn more profit.
Yeah, could exploit it or appear to earn more profit, but certainly earn more bonuses.
So could we then make join the dots and say the reason there was a crash, the reason there was a property bubble, the reason people bought houses that were worth twice the amount and then subsequently lost their houses, lots of people probably took their own lives, marriages broke up, families broke up, people, became homeless, people imprisoned, all that kind of stuff. If we take it back, it's all because directors wanted to earn more bonuses.
Well, yeah, more precisely, American bankers wanted to earn more bonuses.
They did, but yeah, in Ireland we
copied.
We copied.
What happens in lobbying is that people will go to the Irish government and say, in America, they have these new accounting standards called the International Accounting Standard. Well, we'd call them the Financial Accounting Standards Board. And those accounting standards say that a loss can only be recognized when the customer defaults. We think that's a good idea. It's working in America. It's very easy to encourage an Irish politician to adopt the same approach. That's basically how lobbying works.
I mean,
if it's a bad idea and there's people earning bonuses, it tends to travel right across the world.
I mean, that is shocking to me that Ireland, that what we went through, and we have to be, like, I want to just remind people about, people really struggled, people took their own lives, people died by suicide, marriages, imprisonments. Like, we have to remember what that was like. It was a bad time for a lot of Irish people. How, as a country, I mean, I've been having a lot of these conversations where the government, the institution, the department, it's protected, but often to the detriment of the people of this country, who these people are supposed to be serving, right? How have we allowed that to happen to protect some? I mean, are we saying we're protecting bankers from going to prison? Are we saying, like, how have the central bank made decisions like this to allow this to happen, for banks to hide losses, to not prosecute bankers, but allow the people of this country to suffer in such a way?
Well,
I mean, I'm asking you a question that,
yeah.
I'm not expecting you to answer because you're not like it's
Well,
like
I
for me,
mean,
I'm like,
I can
how have
partially
we come to
answer it.
that?
Yeah, well,
Yeah.
I can partially answer it. If you were an American and you were on a bonus scheme, and let's assume that you decided to buy private jets and all sorts of things, so you were up to your neck in borrowed money, and therefore you were dependent on a bonus scheme. You would push for anything that improves your bonus. And in America, what they decided was that if banks were allowed to delay the recognition of losses, we could sell them complicated structure. We could sell complicated structured products to people, and they wouldn't have to recognize the loss. So we're selling dodgy stuff to people. They don't recognize the loss, therefore it's easy for us to sell them. I get my bonus. That's how it starts. So if you want to follow the money, look at how bonuses are calculated. As Charlie Munger said, show me the incentives and I'll show you the outcome. And if you're paying people bonuses to enter into loss-making transactions, you can rest assured that banks will accumulate substantial losses. Now, they did that in Ireland between 2005 and 2008 or 2010. In 2010, when it was all discovered, the government were given a choice. The correct approach the government should have taken is to say to the banks, we know you've overvalued the assets. We want the auditors to go in, check the proper valuation of the assets, and see what your shortfall is. And then we'll bail you out, because we have to bail you out. We need you to keep functioning. But if they had done it properly, the auditors would have gone in and said, there's a discount of about 50% or 55% that we have to apply to these loans. Therefore, the companies, the Irish banks, have been trading insolvent. They have been trading when the value of their assets is well below the value of their liabilities. They are in breach of company law, and it's a potential criminal offence. So a lot of Irish bankers and UK bankers would have found themselves in prison if the Irish government had done it properly. They didn't do it properly. What they said was, keep on declaring that you're solvent. Tell the world that there's just difficulty borrowing money because everyone's in panic mode. Then we'll put money into the bank, we'll bail you out, we'll get shareholders to put money in the bank as well. And then when you have enough capital in the bank, you can start declaring losses. So you can delay declaring them and declare them gradually so that you'll never appear to be insolvent. So you can see the motivation behind all of this.
100%. But it's the, if I was like, a conspiracy theorist or something, I'd be saying, well, it's the 5% win again at the and the rest of us suffer. So to stop a few bankers going to prison, we made, thousands, hundreds of thousands of people suffer. Like that was created by those decisions.
Yeah, definitely.
People's miseries.
I mean, it was foreseeable.
People who were encouraged to buy these houses.
Yeah. They knew that they were going to suffer, and they knew that quite a lot of them were going to go bankrupt. And the evidence for that is that when AIB and Bank of Ireland were forced to sell their loan portfolios to NAMA, the National Asset Management Agency, a discount of up to 60% was applied, which means that the loans were grossly overvalued. So the foreseeable losses were about 60%. So in your example, if you borrowed 400,000, the NAMA would say, well, that loan is really only worth 240,000 if you take economic factors into consideration.
So having allowed the banks to sell a house for 400,000, then the government who set up NAMA are then saying, oh no, that house is only worth 200,000. They're saying it themselves, even though on one hand they've allowed it, then they're going, no, that's not what that's worth.
Well, yeah, in the space of a few years, that's what happened. They would have issued a loan for 400,000 and then sold it for 240,000. And worse still, this accounting, if we can call it a fraud, I think it's quite safe to call it a fraud, opened the door to vulture funds, because vulture funds could go to the banks with the ECB's approval The ECB would say to the banks, you have a number of dodgy loans on your books. We want you to be safer, so we want you to transfer all the dodgy loans to the vulture funds. And the vulture funds will say, yeah, we'll take on those loans, but we want a huge discount, because even though the loan might be worth 400,000 initially, it dropped down to 240,000. We have to make a profit. Therefore, we'll buy it off you for 160,000. And it's the vulture funds then that are pursuing the customer for the full 400,000 if they can get it. And because property prices have risen, they are going for the full 400,000. There was never any need for the vulture funds. They arose because of an accounting gimmickry. Banks could sell loans to vulture funds, but they didn't have to disclose the loss they made on the sale. They didn't have to disclose the discount. And therefore, technically, shareholders cannot approve the loan sale to vulture funds.
But what I can't understand is why, if you're a government minister, like, I mean, we all remember the Brian Cowan. We were all sort of glued to the TV and to the whatever, and he made this decision, late at night to bail out the banks, and this was a big thing, and it was almost like, my God, the politics became, the celebrity story. It was must watch TV. All people were talking about. He's bailed out the banks. I mean, I wonder what sort of conversations he was having, and why are we as Irish citizens, how did we end up in a place that we have a government who are more interested in keeping bankers out of prison than doing the right thing by the people that voted for them, and the people that essentially, employ them, and put them in those positions because we trust them? How have we as a country come to that position? Because that seems to have triggered something. You might say it started off with Charlie Hoy or whatever, but that certainly seemed to be the next development in the protection of the institution over the people, and we don't seem to have managed to be able to stop that since. If you go to the HSE, if you go to the care homes, if you go to HICWA regulators, they can't actually do anything. Central Bank now we're going to talk about as regulators, like that just doesn't seem, we don't seem to be, nobody in government seems to be able to shout stop,
Well, first of all, if you go back to the famous night of September 2008, when the bankers went into Leinster House, the bankers simply said to the government, if you force us to close banks, this is going to create a catastrophe. Your first priority is to keep banks open. And the only way you can do that is to lend us money or put money into the banks. And they got an accountancy firm to do a check on the assets, but the accountancy firm did not value the assets correctly. They were basically
the banks hired an accountancy firm.
The accountancy firms,
not the government.
There is evidence. I presume the government would have hired the accountancy firms, but the accountancy firms were in a conflict of interest because they were helping banks to hide losses. So it wasn't in their interest to expose all of this.
It wasn't truly independent.
They were not truly independent. So they basically gave a valuation which gave the impression that the banks were solvent and they just were short of cash. And the impression was that the government would get the cash back. But that didn't happen, of course.
So were the government when we bailed them out? Were the government unaware that there was?
They probably weren't aware on the night of 2008. They were unaware of what they were doing. There were famous Anglo tapes. I don't know if you recall them, where the chief executive of Anglo basically bullied the regulator. He said, if you want to see Anglo collapse, you're going to get into difficulty. And the regulator, through the central bank, would have put in funds into Anglo. And then Anglo would have said, well, you're going to be exposed for this particular mistake. I think the phrase they used was, you're pregnant on this issue. In other words, you're now committed to keeping Anglo open. Otherwise, you'll have to reveal that you made a huge mistake. So that's the way
you're an accessory to the crime.
You're a potential accessory to the crime. Yeah. So I suppose the important point of all this is it's all very well going through history and saying this is what happened.
Yeah. So where are we at now?
We need to focus on the practicalities. A few groups of people have had successes. There was a group of tied agents. These were owners of building society franchises where they could basically set up shop and sell EBS mortgages. And they were in the newspaper recently because they had some success in saying to EBS, the reason we're in difficulty is because you can't supply mortgages to us. And the reason you can't supply mortgages to us is because you produced accounts which were misleading and therefore you couldn't borrow money. So it's your fault that we're in this difficulty. It's not bad luck or anything like that. It's your fault we're in this difficulty. And according to an article in the Mail on Sunday, these people were compensated. So there are groups of people who are pushing for to resolve this, and with some degree of success. Now, some of those tied agents were penalised for being vocal, or at least appear to be penalised for being vocal. But by and large, there are some success stories. Probably the most urgent issue at the moment are those people in court facing repossession. The vulture fund who's taken them to court has to prove two things. First of all, that they defaulted on their loans, and secondly, that the vulture fund is the proper authority or the proper party to enforce this particular loan. On the first point, how can a vulture fund prove that a customer has defaulted on their loan if the originating bank has not complied with unfair terms legislation? So, for instance, take your case: you bought a property for 400,000. The bank knew that there was a crisis on the horizon, and that the 400,000 was an unrealistic valuation, and that 250,000 was the better figure to use. Then you have not made an informed economic decision. So technically, you could say to the judge, how can the vulture fund claim that I'm defaulting when there is an unfair term in the loan contract? In other words, the clause is unenforceable purely because it's unfair. And even if you don't raise that, the judge, in theory, is obliged to look at the contract and see if there is an unfair term. He's obliged to ask himself, on the date this individual signed the contract, did he make an informed economic decision? And given what the bank knew and what you knew when you signed the contract, the judge would have to say, well, this mortgage contract is a lot more expensive than the 4% interest he's been quoted, because there are foreseeable losses here which the bank are going to impose on the customer that the customer is unaware of. So the judge should say that there are unfair, or could say that there are unfair terms in this loan contract. At least the matter should be investigated. In which case the party taking you to court is unable to prove that there is a default. The second thing that the vulture fund must prove is that they are the party entitled to take you to court or enforce the loan. And broadly speaking, they must have what's known as the legal title to do that. The legal title basically means that when you enter into a contract with the bank, then the bank have enforcement powers against you, and the bank claim they can transfer those enforcement powers to a vulture fund. But that is questionable, because this might get a bit technical, but it is important. When the bank would have taken out your loan or given you a loan in 2008, it was normal practice for the banks to securitize those loans. That means put them into a portfolio and sell that portfolio to foreign investors. That's known as securitization. So immediately after your loan was granted, they would have transferred your loan into a securitization vehicle. And it means that the bank is still the contracted party with you. It's known as the credit servicer. The bank becomes the credit servicer with you, so it still collects money from you. But any money it collects, subject to a small fee, is transferred to the purchasers of the securitization. In other words, the purchasers of the portfolio. Now, a practical problem arises because if the bank are not complying with company law, they are not allowed to transfer any money they collect from you to the securitization vehicle, for the simple reason that if the bank is not showing proper accounts, then all creditors must be protected. Not only the securitization purchasers, but all creditors must be protected. So therefore, they're not allowed to act as credit servicers while they're not producing accounts. The consequences of that is that if they cannot act as credit servicers, they lose the legal title to the loan, and therefore they cannot sue you in court. The securitization vehicle may be able to, but the bank cannot. But what has happened is the banks have failed to disclose that they're not showing their accounts properly. Therefore, they failed to inform the land registry that they've lost the legal title. But then they've sold the legal title to the vulture funds, so they have sold something they haven't got. And the courts should investigate this, because the banks should have informed the land registry that they no longer have the legal title. If they had, they would not have been able to sell the loan to the vulture fund. And Ed Honahan, the Master of the High Court, has highlighted this point. He has highlighted the fact that the land registry records are wrong, and they can't use land registry records as evidence that they have the right to take you to court.
Mm-hmm.
So there's two valid points of defense there, which anyone facing repossession who borrowed money between about 2004, I'd say, to 2012, can make.
So anybody that's out there sweating about facing repossession, they have two valid arguments.
They have two valid arguments
to save their home, or to avoid prison, or what?
To save their homes and to avoid prison, because if customers or rather if judges are giving orders based on we call it criminality, because if a bank fails to comply with company law and deliberately does so, that's a potential criminal offence. Then those orders would appear to be unsafe, and defendants should have an opportunity to defend themselves against that. This should be brought up in court so that the judge can determine whether a default has occurred, or whether the party, the vulture fund in the court, has the right to enforce the loan.
Okay, so it's good news. I mean, I think we're going to have to talk again sometime, because
But just before you say it's good news, I have to be careful and say it's qualified good news, because it's very hard to get this into courts. It's very hard to put those arguments into courts. This is because most possessions are on a summary basis, where everything is done by affidavit, and it means that if a person turns up in court, the judge just reads the affidavit, and it's quite obvious that they just by affidavit alone, that the judge cannot see the nuances of the argument.
And won't allow the time.
And they take the view that the banks are represented by compliance teams and huge legal firms and expensive barristers. So if there was negligence or failure, that would have been stopped ages ago. There's no. If you're a compliance officer for a bank, in theory, there's no incentive for you to allow the banks to conceal losses or to mislead customers. But that's what's happening. So it's very hard to get that into summary cases. And what happens is, particularly in lay litigant cases, you have a lay litigant probably doesn't understand the nuances of what we've just discussed, and a barrister who knows how to get round all of this without revealing the truth. And therefore, there are repossession cases or flawed orders issued on that basis. And I have to say, it's very difficult to find a lawyer who will bring those two arguments up. They're either afraid to do so, or it involves a lot of research on their part, which they might not be paid for adequately. And it's a risk on their part, because even if they do bring up these arguments, the customer could still lose the case. So the way to do it, obviously, is through plenary hearing, where somebody can give expert evidence.
So once again, we're looking at justice in Ireland favouring the people with money.
I think with summary cases, you can say that quite convincingly, because with summary cases, as I said, everything is done in affidavit, and the judge looks at this and says, okay, the guy borrowed money, he has to pay it back. He hasn't paid it back within the agreed time period. Then he looks at the land registry records and says, okay, Vulture Fund X is the on the land registry records, therefore they're entitled to sue. So I have two simple decisions to make, and then I just move on. And some judges regard themselves as sympathetic by stating that customers should be put out of their misery. There's no point in this dragging on and getting them to court and getting them all tense and worked up. Just close it now and allow the customer to make plans.
Yeah, I mean, if you were a cynical type of person, you'd think this is like, almost like a decision that's been made to make sure that we keep a lid on the fact that the banks were always hiding losses, and therefore, once again, I'm not saying that's true, but if you were a cynical person, you looked at this, you go, once again, we're protecting the banks, we're stopping some bankers from going to prison, and that's all at the expense of the citizens of Ireland.
Yeah, I mean, it's again, the ordinary individual doesn't have lobbying power. Banks do, vulture funds do, so you're going to get a result that's rather there's a risk that you'll get a result which favours the banks or favours the powerful.
What are the central bank then? Why?
Well, the central bank are a very dangerous outfit because they're giving the impression that banks are regulated.
Yeah,
and they're not regulated.
That's the problem. If there was no regulator, you'd be like, oh, right, everything's like, everything's just kind of whatever. Anything goes.
Just imagine one of these boiler companies from Nigeria rings you up and says, pay us 100,000 and we'll double it to 200,000. You might be foolish enough and say, okay, I'll give you 100,000. But the alternative is to go to a bank and borrow money. And you might say to your father, I haven't enough of the deposit here. Can you make up the difference? Now, your father wouldn't give you any money to invest in a Nigerian boilerplate scheme.
No.
But he'd give you the money to a bank because he assumes that the banks are regulated and properly supervised.
Yeah.
But that's not. The regulators are giving a false sense of assurance. The newspapers should also be covering this. But how many newspapers in the last 2 decades have said that banks are hiding huge amounts of losses in breach of company law? And you would have thought, okay, maybe 6 months they wouldn't have clocked onto this. So maybe back in 2005, you could forgive the newspapers for getting this wrong, but we're now 20 years on from 2005. We still have the problem. The newspapers are not covering it. Yet there are many columnists in newspapers are saying, that customers are suffering and we're looking after them and so forth. So it gives the impression that the newspapers are looking at banks and exposing wrongdoings. And the same with RTE. But in reality, none of the newspaper outlets or the media outlets in Ireland have said that banks are hiding losses in breach of company law. It just takes those 2 sentences. If that was said in the public media, I think judges would have to take a different view to how repossession cases are going. Because if banks are in breach of company law, it's impossible for them to comply with unfair terms legislation. If banks are hiding losses and they're trying to impose those losses on customers but not telling customers, then they are in breach of unfair terms legislation. And if banks are in breach of company law and selling loans to vulture funds without revealing the discount, then there is a risk that the vulture funds, A, are buying something that's worth nothing because the banks have already lost the legal interest. And secondly, when they're buying them at a discount and they're not approved by the shareholders, there is the risk that the sale is invalid.
So, I mean, I don't want to keep you too much longer, but can we then come to the conclusion that the reason there's a housing crisis at the moment, and young families, people who even or public servants like a Garda and a nurse, don't have enough money to put their salaries together to buy a house. Can we say that all of this is coming from this, banking, the hiding losses, central bank not regulating?
If I take you back before 2000, and I was a banker, and you were in Dublin paying extortionate rent, I would approach you, because it's in my interest to approach you and say you can get a mortgage and reduce your monthly outgoings by 25%, and you become the owner of the house after a while. And you would find that attractive. But banks are not doing that today. And the reason they're not doing it is for 2 reasons. A, no one knows if they're hiding losses still. And B, because no one knows that, the central bank have taken the view that the best way to control the banking system is to control the number of mortgages they issue, or restrict the number of mortgages they issue. The less they issue, the less risk, and therefore they can stay afloat. If they are allowed to issue more mortgages, there is the risk that we go back to 2005 and have another banking crash. In reality, we need to take banks back to the 1980s and 2000, when under company law, they were forced to reveal all losses. So therefore, they would steer away from dodgy loans. They would have precautions in place to make sure that they wouldn't enter into dodgy loans. In other words, 110% mortgages or 150% mortgages. That's not happening today. And therefore, we have a dysfunctional banking system. And we have two groups of people. We have people who are in emergency accommodation and are dependent on the state. And then we have people who are middle income, who can afford a mortgage but are denied the mortgages. Both are forced into the rental sector. And it means that the social welfare people are paying extortionate rents or even hotel fees, when in reality, what they should be doing is going to the banks and setting up a trust where, instead of putting people into hotels, the hotel income was put into this trust and used to borrow money to build houses. That's known as social housing. That's what they did years ago. They don't do that anymore. And then for the people who are on professional incomes or are on decent incomes, to make sure that they have mortgage facilities available to them. But what's happening in the government is, or rather in Ireland, is that the people who own property want property to go up. And often they're in very rich areas, and often they can influence government policy. And of course, the vulture funds want a situation where everyone in Ireland rents and they own the properties. So there is a lot of pressure to keep the status quo, and
nobody with the balls to stop.
The power to stop. That's the problem.
So all of this has happened because we wanted to keep a few people who worked in the banking sector out of prison.
Yeah, it's. I mean, I don't think we'd have got to the stage where we're at the moment
if we just
back in 2008, somebody said to the banks, "If you want money from us, tell us your true position. Tell us the truth at that point. If you have to go to prison, you have to go to prison, but tell us the truth, and then we decide how much money you need." And
then with the central bank, we have a regulator who's not actually regulating. But it's worse. It's worse.
It's worse because
it's worse because it looks like
that is regulating. So it means that the Irish banks have a competitive advantage over their Nigerian counterparts.
Yeah. Look, I mean, I know there's a case on at the moment. We don't really want to talk about it, but maybe come back and talk to us about that. And if anybody has any questions, I can put those to you then when we talk again, maybe in a week or two.
Sure,
so if anybody watching has any questions, you can send them to us on X or Instagram or MOTH News. And maybe I'll put some of those questions to you if anybody who's finding themselves in trouble, or I'm shocked. The more I talk to people like yourself, my jaw can't drop anymore. So look, I appreciate your time. It's probably a bit longer than we both anticipated, but let's do this again and maybe again and again and again, because I have a lot of questions for you.
Okay.
Cormac, thank you very much, and best luck with everything, and we'll chat again soon.
Sure. Okay. Thank you very much.
All right. Have a good day. All right. Thank you very much.
Bye.
So there you have it. That is Cormac Butler, and I'm very shocked. Yeah, very shocked. I don't know what to say. Look, we are going to be on live at 11 o'clock. I got to leg it, get into the studio. Thank you very much to Cormac Butler. We will definitely be talking to him again. There's a lot to unpack there. I did spend a lot of time going back to the history of how we got to this point, but I just needed to, and we will talk to him again. I think we should do a series of conversations with Cormac, and we should talk about it until central bank start regulating, and the property crisis, homelessness. So few bankers, to keep a few bankers out of prison. Is that what we want for Ireland? Is that what we want? Is that the country we want to be living in? Anyway, I'll talk to you. We'll be live at 11 o'clock, and I'll have clips of this. And please do feel free to share this with anybody that you think might be in trouble, might be looking at losing their homes, might be in danger of, might be looking at facing prison, whatever. Show them this. Tell them about Cormac. Look for articles. There are arguments to be made. I got to go. Chat to you from MOTH News Live at 11 o'clock. I've got about 45 minutes to get there and get myself set up. It's exciting. I'm like Annika Rice. I'll see you then.